Tesla is one of the most popular companies not only in the car world but in the stock market as well. As you can see here, it's currently listed at number 10 when you assign them by market cap. So Tesla is part of the $1 trillion club. They are currently worth 1.36 trillion. So let's take a look at this company, see its metrics, see its financials, and see if maybe this is a good investment for our portfolios. Now, this isn't the intrinsic value of Tesla. This is to give you an idea, but we will take a look at the intrinsic value. We're going to take a look at a bad case scenario for the company, at a median case scenario for the company and the stock price, and then the best case scenario overall. Now, if we take a look at this line, this is what the intrinsic value should be throughout the years compared to the stock price. As you can see right now, it is considered to be about 90% overvalued. Again, we're going to be taking a look at 3 different scenarios to compare this price to the intrinsic value. This is not the actual one we're going to be taking a look at. But how I like to personally invest is I always like to find divergence between the EPS of the company and the share price. Okay, so what do I mean by that? As you can see here, in previous years, Tesla was increasing in its EPS. However, its share price was going down. So there is divergence because usually, as you can see back here, when the EPS increases, the share price increases as well. But what is happening right now? If we take a look here, the EPS have been decreasing. However, the share price continues to increase. This is not a very good sign for me. I want you guys to let me know in the comments what you guys think about Tesla, because I know there's a lot of both sides in the stock market. A lot of people invest in Tesla due to what's going to happen in the future with robotics and AI, this and that. And a lot of people don't like Tesla because of the valuations, which totally makes sense to me because I like to invest in value stocks. Now, if we take a look at the annual financials for Tesla, revenue is up 1% at 97 billion. And then everything else is pretty much in the red apart from operating cash flow. I mean, operating income is down 13%. Net income, which is so important for a company, is down 52%. EPS is down 53%. That means they lost their earnings per share for half. So if they're making $10, now they're making $5. That is kind of ridiculous to me. I don't know. I don't mean to hate on Tesla, guys. If you're investing in it, I know a lot of people have made money in it. This is just my own personal opinion. It just seems crazy to me. They're free cash flow, guys. 18%. Now, I know this one is kind of tricky because they do reinvest a lot. They have $3.6 billion in annual cash flow value, and that will grow about 30% in the next 5 years, so the 5-year average. I mean, it is expected to grow, but still, I mean, for a company with $1 trillion, I think they should have a lot more cash. Now, one good thing I will say about the company is that they have more assets than liability, currently sitting at 128 billion in assets and only 51 billion in liabilities. This tends to be good when investing in a company, but you can't just take a look at this. You have to take a look at everything else. And when you take a look at the overall efficiency of the company, I mean, for a company, again, for $1 trillion, this is not good, okay? Gross margin at 17%. When you take a look at any company like Microsoft, Apple, Google, their gross margin is over 40%. They're just dominating the market. They have a lot of moats, okay? 17%, I'm sorry. If you love Tesla, it's not good, okay? This is not financial advice, but it's not good. You cannot have 17% gross margin at $1 trillion. I don't think, I don't know. Everything else, again, the net margin 6%, cash flow, I mean, everything is at 6%. Is what? Is Elon Musk making a deal with the devil here? I mean, come on. And I love Elon, but it is what it is. And also look at the extremities in price, okay? Like if you take a look at the analyst forecast, again, this is not the intrinsic value. It goes from $19 to the lowest forecast to the highest forecast being $630. How does that even make any sense? How do you value a company that has such a stretch in price? And also when you take a look at the competitors, right, you have this list here, and let's just take a look at the ones that sort of are in the electric car field, in the batteries field. For example, BYD, which is a huge company, still considered to be undervalued. Compared to Tesla, 90% overvalued. I mean, come on, guys. There's General Motors, there's Ford. Ford is undervalued. Ford, not Tesla. Ford is undervalued. I mean, that's kind of crazy to me, right? Then you have Neo and Rivian as well. Again, guys, I'm not hating at Tesla, okay? I'm sure a lot of you made a lot of money. I'm sure Tesla in the future will have a robot that's going to cook for you and they're going to make trillions and gazillions of dollars. But I don't see it now. I don't think it's a good investment for me personally now. Again, if we take a look at the comparison between price and the EPS and the PE ratio along all 3 together, we can see that the sales are decreasing. However, the PE ratio, which means how much you're going to pay for the company per share, and the share price have both been increasing. In hindsight, you're paying more for a company that is making less sales and less money. Again, I'm pretty sure in the future they're going to do something about this. And you might say in the comments, well, then you should invest in it now so that for the future you make the money. No, I don't like to invest like that. I want a good company with a good price now. I want you guys to let me know in the comments about that. I'm intrigued to know what you think of Tesla. And now, what you've all been waiting for, let's go ahead and take take a look at the intrinsic value. As you can see here in the base case, Tesla is worth $44. That means the company is currently overvalued at 90%. The worst case scenario, guys, overvaluation of 95%, stock being worth $20. And the best case scenario, keep in mind best, this means like the top of the top, overvaluation of 79%, making the stock worth $89. I'm sorry, I have a lot of respect of people that invest in Tesla. Once again, I'm gonna say it again, I'm not hating, I just don't understand it personally. I don't have that thick skin to hold my investments like this. I wish I could, but I don't. Okay, I'm a little on the safer side, and when I see stuff like this, it drives me crazy, because then I see people make all the profits, and then it drives me even crazy that I wasn't able to do that. But it is what it is. It's part of investing. Everyone has a different way to invest. And I honestly wish you guys the best of luck. And I honestly hope Tesla goes bazillion dollars in the future. And I actually like Tesla. My girlfriend owns a Tesla, and they keep on taking new cars, new models. It's a great car. I love to drive it. But the stock is just not for me right now. So let me know in the comments below if you own Tesla, and let me know why. I want to understand Tesla a little bit more, because I know there's a lot of hype of it in the market. So as always, guys, if you enjoyed the video, please consider leaving a like. Don't forget to subscribe, and as always, I will see you on the next video.